Real YouTube channel. It's Tuesday, September 17th, 2024. Yes, I am driving, and yes, I'm going to keep my eyes on the road unless I stop at a stop sign or a stoplight. I just want to get that out of the way. I know some of the live broadcasts, there's been some concern about that. So guys, haven't made any content or posted anything here since, I think it was around late August. Busy couple weeks, sick at the beginning of September. That didn't help anything. So hope everybody's had a good kickoff, the unofficial kickoff to fall, which for me is after Labor Day. And, you know, a lot of stuff going on, guys, a lot of areas I could focus on. Let me just get out of the way right off the bat. You know, 2 assassination attempts on former President Trump. I would say the oligarchy is trying to tell him something, and you know, proceed at your own peril. You know, I am no fan of the guy. I do not want to see him back in office. He is just as bad as everybody else when it comes to the type of things I'm concerned about. Exploded the national debt when he was in office, even before COVID. Don't let that fool you. Added $4 trillion, I think, up to 2020, and then added another 3 and change during the pandemic. So he nearly added $8 trillion during his tenure. But I will say this: it really is starting to appear that there are forces unseen that do not want this individual to repeat as president, and it's a bit of a stretch to imagine that there's all these lone wolves out there that are this good at getting close to the president. You know, I mean, you know, you gotta scratch your head a little bit on that one. But, you know, again, I've talked about this before. Change your framework. Recognize that you're not living in a democracy. You're not living in a republic. You are living in an oligarchy. Oligarchies do what they will. They do what they wish to preserve the power structure, and then everything makes sense. You know, you don't need to scratch your head that long if you subscribe to that framework. Economically, or excuse me, finance-wise, guys, just kind of shifting from the politics stuff, where I don't like to get bogged down too much. I think I've posted this elsewhere. I don't think I've posted it here for you guys on the YouTube channel. But I went long Nvidia back in early September. I think it was the first week of September after Labor Day. Something I was hesitant to do, even as I pulled the trigger, because the stock investing I've switched to is really just about boring, you know, mediocre value stocks that produce a dividend. And, you know, I'm never going to sell them, hopefully. I mean, it would be an emergency if I had to sell them. I want them to be there generationally for my son. And in the meantime, you know, if I did have to pull some income out of it along the way, I would obviously do that. That would be part of retirement and stuff like that. But actually selling the stock, I have no plans to do that. So that's what I've been doing. I mean, I'm focusing on things like AT&T and Wendy's and Kraft Heinz and Energy Transfer, that LLP that produces like a 9% dividend or whatever it is for natural gas, I believe. So that's where my focus has been. The only speculation I did is I bought the ultra short real estate ETF SRS. That was the one speculative move I allowed myself, because I'm calling for, you know, my own mind. I mean, you know, do your own research, but I'm calling for a housing market collapse. I mean, I do believe that, you know, residential is, you know, unfolding as a future collapse. The residential housing market is strained by now increasing supply, but decreasing purchasing ability by homeowners. So you're now seeing oversupply crop up in areas that were really doing well for a while, like coming out of the pandemic and stuff, down in Florida and Texas and stuff like that. So anyway, the bottom line is, that was the one speculative move I allowed myself. But then I read this paper called Situational Awareness, The Decade Ahead, by Leopold Aschenbrenner, former OpenAI employee, where he was talking about what he foresees in AI and reaching AGI, artificial general intelligence, superintelligence, things like that, by 2030. And he happened to make a remark in the paper about, it was like a footnote, and it was towards the back of the paper. So if you gave up on the thing early, you'd never see this. But he said something like, he was talking about demand for chips. And he was like, yeah, all of us out here in Silicon Valley went long Nvidia way earlier than you did, but if you think it's too late, you're wrong, because there's so much more pent-up demand than what has already occurred. So basically he was saying, like, you haven't seen anything yet. Like, if you think Nvidia's run up, you haven't seen anything yet. So when I read that, after reading his entire paper and being very impressed with his analysis and a lot of the things that he was saying about where AI was going and what he sees on the inside looking out, I was like, okay, I think I need to buy some Nvidia. You know, it just felt like an Amazon type moment. You know, it felt like, okay, this is like Amazon in 2000, when analysts were taking a giant shit on it because it wasn't profitable and Bezos kept reinvesting revenue into the company and there just wasn't, you know, the performance wasn't there. So the concept was seemingly catching on, but the performance of the company didn't excite analysts and they just took a giant crap on it. And, you know, of course, you know, we know what happened with Amazon. So bottom line is, that's what I'm kind of feeling about Nvidia. Now, you know, it's a dangerous feeling. Like, it's just a gut feeling. I haven't read any earnings reports from Nvidia. I haven't, you know, analyzed the company financially. I've just followed it more anecdotally. You know, I've taken an interest in AI. I've kind of watched it from afar and used a lot of the tools and stuff like that. So for me, like, Nvidia is an interesting play that I kind of feel I just had to be a part. I just had to get a piece of it while I could still get a piece of it. And that's where I am right now. I bought very few shares of it. It's a pathetically tiny amount. You know, I mean, you know, I think I bought it at like 127 and then 118 and then 105 as it fell, you know, because right after I bought it, it fell. I mean, like, I bought it the day that they announced earnings. Total coincidence. It just happened to be right after I read that paper. So they announced earnings, they plummeted, they bottomed out at like 101, and then they went back up. And I think yesterday they were at like 117 or 116, you know, somewhere around there again. So, you know, again, I just had to have a little piece of that pie. That was it. So I'm really not, I mean, I got my little piece of the pie. I probably am not going to add much more to it. I think I kind of vowed, like, if it goes below 100, I would buy some more. If it stays above 100, I might just, you know, leave it as is. So again, it was more like, to be honest with you guys, it was more like I was just scratching the itch of, like, okay, I read this guy's paper saying you haven't seen anything yet with Nvidia, and if I didn't buy, that would haunt me forever. Like, you know, 20 years from now, when Nvidia is like, you know, $10,000 a share and it's split 10 times over, I would be like, damn, I read that shit in that paper. You know what I mean? So I had to buy it just to scratch the itch of reading it in the fucking paper. You know what I'm saying? So anyway, so that was something I did recently. I didn't have a chance, I don't think, to tell you guys since I did it. And then the other thing I would direct you guys to as I wrap this up is, if you guys get a chance, if you follow me on Twitter, but under my personal account, CJ Anastasio, at CJ Anastasio, I'm engaged in a back and forth with this account. The handle is at fiat, you know, FIAT _money. Okay, and we're going back and forth about, is the national debt good or bad? This account actually proclaims that the national debt is a healthy, vibrant, positive characteristic of the United States. That the interest that we have to pay on it enriches us. I mean, it's just sheer madness, in my opinion. But what's amazing is the individual or individuals, or, you know, 3-letter government agency that runs it is so dedicated to this position that, you know, you got to be like, okay, like, you know, am I missing something? So, you know, I'd be really interested if you guys get a chance, if you happen to go over to check out the exchange. You can kind of see both of us making arguments back and forth to each other, and you know, be curious with what anybody thinks. I mean, I'm at the point right now where I'm like, you know, I try to keep an open mind about everything. I'm like, okay, maybe the national debt's an asset, right? Like, maybe we should just kind of look at it like that, and you know, like, hey, this is great. Let's print, you know, let's print $1 quadrillion a day. You know what I mean? So it's something that I think I have the kind of mindset where I'm like, interested to see what you guys think about it. So yeah, I'm gonna go ahead and cut it short here, guys. Having some connectivity issues. So yeah, we're gonna drop it here, but yeah, check it out, guys. It's at CJ Anastasio on my account, and then you just look at the exchanges I'm having with at Fiat Money, and interested in what you guys think about that. So thanks for everybody who checked out the live while it was live, and yeah, hello Big Brown Potato. Thanks for checking in on the live here. You know, so we'll go ahead and get this posted on the channel. If anybody has any reaction, comments, questions, etc., would love to field those. Hope everybody's having a good mid-September, and we'll be checking in with you guys again as soon as I can. All right, thanks guys. Have a great Tuesday.